Welcome to the Daily Brief, where we'll go over the highlights in the market for Tuesday, October 25th, and then we'll go over the highlights for how things look for Wednesday, October 26th. Had another positive day. We were able to break above some short and even longer term resistance areas and close above that. Saw another pretty strong advance, but we're kind of overdoing it in the short term. We're looking a little bit overbought and we're running into other resistance that may get in the way, where it might at least pause things for a little bit. But overall, things are turning back a lot more positive currently. So let's go back and talk about what happened. Right at the open, we went up to R1, which was at 38.25. That's pretty positive. Not long after that, we made it all the way up to R2 at 38.52. As the day went on, prices fell back a little bit, but then buying came back in and we actually went above R2 going into the close. We were up 1.63% on above average volume. So we did see a pickup in volume on an up day. That's more positive. The technicals are turning more positive. Some of our really long-term indicators are starting to turn and bounce up after being extreme negative. In the short term, we are looking like we may have overdone it. Intermediate term, we're a little bit more mixed with things right now. Inflation and interest rates are still the big concern. Of course, we have the Russia-Ukraine situation with the deployment of the 101st Airborne into Romania. One report I read said we're 3 miles from the Ukraine border. If something happens there, it could escalate big time. Hasn't really had an impact on the markets, at least yet, but that could always change. We've got lots of earnings reports coming out. In fact, after the close on Tuesday, Google reported and their report was not taken very well. So that could pressure things going into Wednesday's session. The Fed is not giving any interviews or speeches right now because they're on silent mode. And then we have the midterm election coming up, which a lot of times these don't have a real big influence on things, more than just a short-term impact. But things have turned so political these days that it might have some kind of an impact. So some comments. What really supported stocks in Tuesday's session were declining interest rates. And that came after some weak economic reports were released. And I'll go through that. And this scenario that started last Friday, based on that Wall Street Journal article, that still seems to be viable for right now, that they're going to go ahead and raise rates 75 basis points in November at the November 2nd meeting. And then they're going to talk about maybe not raising them as much in December. Small and mid caps did pretty well in Tuesday's session. We have the 10 to the 5, the 10 to the 2, and now again, the 10 to the 3 month has gone back to being inverted. The 30 to the 5 yield curve is no longer inverted. Sentiment is neutral. We're tipping a little bit more to the positive side, but we're still in the neutral camp. And then here's where I talk about Google. After the close, Google's earnings report is being taken as negative. The FHFA housing price index, it came in as expected, but is still showing a decline at 0.7%. The S&P Case-Shiller home report that we get, that was at 13.1%, weaker than expected. They expected it to be at 14. The last time we got this report, it was at 16. So this continues to show weakness in the housing market. Consumer confidence also came in lower than expected. It came in at 102.5, KZOK, Seattle's best rock. Expected it to be at 105.5. And then the last time we got this was at 107.8. Sorry, that was a radio jingle from where I grew up. Our trend is actually switched over to positive on the ADX. The green line has crossed above the red line. So that is positive. But as long as those two lines stay close to each other, the ADX is going to weaken. But for right now, it's still above 20. Our bias is positive and our momentum is still positive. What's our outlook then for Wednesday? The technicals are turning positive, but becoming overbought, especially in the short term, and hitting some other resistance on multiple indexes, not only just the S&P. They're coming right up to the 50-period moving average. usually the simple moving average. Now, we might just blow right through that, and that would be quite positive. But it could also, because we're a little bit extended with some of our other indicators, we might be due for a bit of a pause, a bit of a pullback. If there is some kind of a pullback, we're going to be looking at the intensity of that pullback. We have the weekly MBA mortgage index coming out, advanced goods trade deficit coming out, and the advanced retail and wholesale inventories. The big one will probably be the new home sales that are coming out, the whole list of geopolitical events. And again, the one that the markets are really fixated on are inflation and interest rates. But anything on this list, except for the Fed saying something right now, any one of these could change things really quickly. So what are our scenarios? Can't really go with the down scenario. We're looking a lot more positive, but there's still lots of headwinds above where we're at. But some of these headwinds might switch over and be positive. Some good things could happen. We're kind of going more with the up scenario right now because they're turning more positive technically. But as I said, we're overbought and at resistance. Our scenarios are showing improvement. The rotation, still not as strong as we would like to see it, but is improving. Our setups continue to show improvement. And the technicals are looking a lot better. Right now, we're at that 50-period moving average. We've been able to regain some pivot points, especially on some other indexes. We've regained some fib retracement levels. So, yeah, things are looking a lot more positive, but we might have overdone it in the short term. Can't really go with the neutral look right now because we're just crossing over positive. So we've had a change in trend and the ADX is still above 20. So our conclusion, the S&P is turning positive, but becoming overbought, specifically in the short term. And we're also at resistance right now. Intermediate term, there's more of a mix of overbought readings right now, but long term, we're still negative overall. So thank you. Have a really, really good Wednesday. We'll see how things play out in Wednesday's session. I may do a full-blown video. If it's a real yawner of a day, I may just do a daily brief.